Hello traders, you're welcome to this video. In this video, we are going to be discussing the best EMA settings for swing trading. Okay, so if you are a swing trader, then you are in the right place because we're going to be discussing the best settings, your exponential moving average settings for swing trading. Okay, using exponential moving averages in swing trading can significantly enhance your ability to identify trends, entry points, and exit signals. So now we're just going to be looking at like a comprehensive guide, straight to the point guide on how you can effectively implement EMAs in your trading strategy. Now, first of all, you need to understand that EMAs give more weight to recent price data. They are more responsive to price changes compared to the SMAs, the simple moving averages. So this is a characteristic that makes EMAs particularly useful for swing trading, where timing entries and exits is crucial. Okay. So now, if you want to use a single EMA strategy, because there are some traders that use the single EMA strategy, while some use multiple EMAs for confirmation. Okay, so if you're using the single EMA strategy, then you might want to use the single EMA on your chart. For example, we're just going to be using the 20 EMA. We're going to be using the 20 EMA. Okay, so when the price is above the EMA, when the price is trading above the EMA, for example, we can see around here when price crossed over the EMA first and then began to trade above the EMA, it indicates an uptrend. While when price crosses below the EMA and begins to trade below it, it indicates a downtrend. Now, when you are using multiple EMAs for confirmation, you might want to employ two EMAs. For example, in this case, let us just be using the 50 and 200. These are like two of the most common combinations being used. So let's use the 50 EMA and the 200 EMA. This is a common combination. Okay. Let us go to a higher time frame for that. Okay. So when the shorter EMA, which is the 50 EMA in this case, when it crosses above the longer EMA, for example, is a buy signal. So you can enter your buy, set your stop loss below the moving average or below the swing low. Take profit can be at the nearest resistance level. And for your exit, you can consider when there is a bearish crossover. On the other hand, when your shorter EMA crosses below the longer EMA is a sell signal. And you can set your stop loss above the previous resistance. Take profit can be at the nearest support level. But when we are using the one EMA strategy, that is when price crosses above the EMA, you can also set your stop loss below the swing low, target next resistance for your take profit for a buy trade. For a sell trade, when price crosses below the EMA, stop loss can be above the nearest swing high, support level can be your next take profit targets. Okay. So now basically, when you're using the crossover strategy, using two EMAs for extra confirmation, is just as the name implies, a crossover strategy. So crossing over upwards indicates bullish signal, crossing over downwards indicates bearish signal. For a bullish trade, stop loss can be below swing low, take profit can be at nearest resistance level. For a bearish trade, stop loss can be above swing high, take profit can be at nearest support level. Okay, basically. And now you might also consider using additional confirmations like the support and resistance levels. They can also add to show you possible exit points. For example, if you had entered a trade here, would have considered exiting around here at this support level. So it helps to show you potential exit points and even potential entry points as well. And then you might want to use trend lines. Trend lines also dynamic support and resistance levels. They're going to be very, very helpful. And then you can also consider adding other indicators to your charts just for additional confirmation. You can consider momentum indicators so that it can reveal to you potential overbought and oversold conditions. Okay, so that's also important. Now, let us consider the optimal EMA settings for various time frames. So for short-term swing trading, you can consider using the 1 hour time frame or the 4 hour time frame. You can consider using the 1 hour time frame or the 4 hour time frame. And then you can consider using the 9 EMA or the 20 EMA. So I'm just going to change this to 20. And then I'm just going to delete this other one. So you can consider using this for the single EMA strategy anyways. So you can consider using the 9 EMA or 20 EMA to capture quick price movement. So you can see we have the price break above, it's a buy signal, the price break below is a sell signal. So that's basically the settings for short-term swing trading. And for medium term, you can use the 50 EMA. So basically you just have to change this to 50. That's for the medium term swing trading. Okay, you can see that it takes longer time to respond to price movements. The longer the period, the more time it takes. Okay, and for long term swing trading, for the middle term, you can use the daily time frame. Yeah, the daily time frame for the medium term swing trading. Okay, you can use that to do your analysis, the daily time frame. The weekly time frame is for long-term swing trading, and then the settings is 200 EMA. 200 EMA is the settings for the long term. You can literally be holding your trade for months. Yes, you can actually hold your trade for months. This is long-term swing trading. Okay, it can help you identify long-term trends and major supports and resistance areas. Okay, so now in order to tailor your approach, you can actually combine EMAs with other indicators. Okay, to enhance your strategy, you can add the RSI or maybe best or maybe MACD or stochastic oscillators just for confirmation signals. Okay, and you can also decide to experiment with different EMA settings as well. Yeah, but we have pointed out the we have pointed out some important settings that are effective for different time frames. You have pointed them out already, but you can also decide to do some experiments by yourself. Okay, that's also fine. Now, some practical tips is you have to always consider the overall market context when using EMAs. For example, now you can look for additional confirmation from other indicators of price action because no indicator is reliable. No indicator is 100% reliable. That's just a fact. Okay, no indicator is foolproof, no strategy is foolproof. And then it's very important to be patient. Trading is a game of patience. So wait for the price to come to the EMA and exhibit confirmation signals before entering a trade. Avoid chasing price. If price have gone far ahead of you, just let it be. But when you observe that price has not yet, or the chart or the strategy has not yet showed up, or price has not yet crossed over the moving average, wait patiently for that signal to occur before you enter the trade. Do not try to enter or jump into a trade when your signal has not yet showed up. Okay, it's very important. So basically, EMAs can provide a clear edge in swing trading by enhancing trend identification, improving timing for entries and exits, and offering a structured approach to managing your trades. Okay, so now if you understand this effectively, if you understand how to use the EMAs effectively and tailoring them to your trading style, you can significantly increase your chances of success in the market. But always remember to combine technical analysis with sound risk management. It's very, very important, okay, for the best results. So I hope you found this video insightful. Kindly like and subscribe for more trading insights. And don't forget to hit the notification bell so that you don't miss out on more trading videos. Cheers and happy trading.